Our trade on Walmart has now made more than 1,000% profit because the stock hit another new high on the last trading day, December 5th. And on this day, we found another unusual trade worth $4.3 million. And so in this video, we will show how we updated our trade to continue to make more profits with no risk by managing our trade. Now, if you've been following our channel, you know that we started our Walmart trade back on August 30th when we detected the first unusual option activity and we went long bullish. And then we updated our trade November 14th, right before earnings. And so you can see that the stock continued to go up even higher. And we were able to show why we went long bullish for earnings in this video. So if you missed it, we'll put a link at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Because right before earnings, we had already made 450% profit. And now, because the stock went up even higher, we are now over 1,000% profit. Now, exactly how much? Well, let's take a deeper look at this trade. So on November 14th, you can see that the stock continued to go up higher to about 13% on the stock. But because we traded options, we made even more. And so you can see here our trading strategy that we updated into these December 20 options have now made a profit of $891 per trade. And because our initial trade over here at the November 15 options that we initially entered with cost $79 per trade, we can divide it out by our initial cost of entry. If you missed this video, we'll put a link at the top here where we show our initial trade back on August 30th. And so if we calculate the profit percentage of 891 divided by the 79 cost of the initial trade times 100 for percentage, you can see that we've made 1,127% profit so far on this trade. So this is another real example proving how our analysis of unusual option activity can be very profitable, even during high-risk events such as earnings, simply because wealthy investors make better financial decisions. No wonder the rich get richer. And by following their trade decisions on Wall Street, we can also make money too. So if you're not as profitable as you want to be, go to our website to gain access to higher probability of profit trades from wealthy investors. We'll put a link up here to our website because this earnings trade was actually lower chance of profit compared to the trades we share on our website, yet we still made profits. So imagine how much more you could be making if you had access to better trade ideas, because not all of these unusual options will be winners. Some will be losers. But as long as we diversify with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, because of the new data on the last trading day, we updated this trade by closing out of these December 20 options, because you can see that if the stock continues to move up higher, we don't have much that we could gain from here. There's a max profit on the blue line here. So there's not much gain we could go up, but we could actually drop down a lot more than we could actually gain. So the risk to reward is not in our favor. And that is why we want to always manage our trades to make sure we have a better risk to reward ratio where the reward is always in our favor. And that is how we trade with our option strategies that we share on our website. So let's take a deeper look at the data from the last trading day. We can see here that on December 5th, 26,318 contracts were being traded at the same time for these February 21st options at the 110 strike call and the 100 strike call, and the January 17 options at the 92.5 strike call. So what is this investor doing? Well, let's take a deeper look at the historical data, because that's something very important that a lot of other websites or scanners do not do. And so they do not always get things very accurate by trading with unusual option activity, because these could be closing trades, not necessarily new opening trades. And so you can see that on December 5th, for these January 17 options at the 92.5 strike calls, we have an open interest of 30,000. And for these February 21st options at the 100 strike calls, we have 11,518. And at the 110 strike calls, we have 313. And so when we take a look at the new data now, once it's updated, we can see that for the January 17 options at the 92.5 strike calls, we have a decrease in the open interest. So those were closing trades where they closed out of these and rolled to a higher strike price and a further date out to the February 21st options at the 100 strike calls. And that is why the open interest has increased, as well as the 110 strike calls also increased significantly. And so we know that these February 21st options are the new opening trades. And so that is how we updated our trade. You can see our position here. POS stands for position, green means buy, and red means sell. And so we can calculate the total trade costs now that we know that the January 17 options are the closing trades and the February 21st options are the opening trades. And so the price right over here is $224 for the 100 strike calls, and they sold the 110 strike calls for $58. And so each trade cost $166. And since there was a total of 26,318 contracts or trades, we multiply that out and we get a total trade that costs $4.3 million. And so when we analyze this trade for the February 21st options, where we bought the 100 strike call and we sold the 110 strike call for $166 each, as we had just calculated, you can see that this trade is a long bullish trade, because as the share price represented on the x-axis here goes up, this trade becomes more positive profitable. And if it goes down, it becomes more negative loss. And so this is our new trade position. But keep in mind, we have a profit from our previous trade that we rolled from these December 20 options that we closed, and we rolled it into these new February 21st options. So we have to factor in the $891 of profit from our previous trade. And so we have a credit of $725 per trade. And so our new trade looks like this. It is a credit trade, meaning we've locked in profits. And so if the stock crashes down, you can see there's no negative loss, no risk. And if it continues to go up, we could also continue to make even more profits, because the cost of this new trade is less than the amount of profits that we've already made. So this is how we've updated our trade to manage it, to continue to make more profits with no risk. But we would not necessarily enter this trade if we didn't make so much profits already, because it is quite risky as we approach that $100 psychological level, because this trade, buying the 100 strike calls, means that this investor thinks Walmart will break the $100 share price. And so let us know in the comments below, what do you think will happen to Walmart? Do you think it will break this $100 psychological level? And make sure to watch this video if you missed our initial Walmart trade. We'll put a link up here, and this last update before earnings. We'll put a link over here as well. As usual, if you want to learn more about our option strategies, make sure to go to our website, Take care and have a wonderful day.